Who is a chief economist at Greater China at ANZ, joining us from Hong Kong. Very good morning to you, Raymond. What do you make of the Caixin survey performing a bit better than the official numbers?
We know the Caixin number and official PMIs do not usually align, and we have seen many times that there has been a very weak official PMI followed by a slightly better Caixin PMI. But look, I see that pay more attention to the new export orders number last week, and it's dropped to 48.6. That's a warning sign for us that whether this export-driven recovery can sustain in China.
I want to ask you, because on Friday it did seem like the official reading was reigniting some of those calls for more stimulus, given that the Q1 GDP print had sort of reduced the urgency for more support measures. Do you believe that this is perhaps building the case, or because we've seen a mixed bag of data in terms of the PMI, that the calls for stimulus is going to be a bit uncertain at this stage?
Oh, absolutely. If we look at this overall official PMI number last Friday, back to the contractionary zone. And we know China is now a two-speeded economy, and the domestic demand remains very, very weak. I'm pointing to the very weak property sectors. And we do pencil in a triple outcut with a bit of monetary policy easing. And I think that is really an urgent call for the Chinese authorities to support the domestic economic recovery. Simply relying on a strong manufacturing sector for certain products, for example, electric vehicles and batteries, might not be able to drive the economic momentum going forward. And plus the fact that we know in the second half of the year, China may also be seeing a growing protectionism and trade tension with other countries. I'm not just talking about the US and maybe Europe as well. So I believe that from the policy point of view, then 5% growth is not guaranteed this year, and we are looking at still at 4.9% GDP growth this year. So Chinese government still need to do more in order to attain their official target.
What do you want to see from the plenum meeting in July to give you more confidence about hitting the 5% target and somehow reflating the economy?
I just feel that the third plenum in July would focus more on the structural reform in China. That has been the case in the past few times, every 10 years, with the rolling over of the political leadership. And of course, this time, with the same political leadership, to extend to another 5 and maybe even 10 years, with a long-term vision up to 2035 in the phase one new era. So I don't expect anything drastic in terms of cyclical boost to the economy, but more a reiteration of how the government want to drive the structural reform and to transform the nation into not only maximizing the GDP, but also the gross domestic happiness.
But we know that the government policy pulse is there now, but it's just that the private sector is not really so enthused, even about mantras like new productive forces. So what now?
I expect especially two sectors that the government would like to make clear. First of all is to have a healthy development of the property market. It's not saying that they are abandoning the housings for living in, but also to use the private sector for those who really want to upgrade the housing needs. That's the affordable housing will clearly be a tool to serve the primary needs of the housing demand. Secondly is the private sector confidence. I do believe that the government would reiterate the fact that the private sector remains a key, will play a key role in driving tech and innovation. Now, the reality is how much this type of statement can actually revive the private sector confidence. So I don't have a huge, probably a full confidence in how this third plenum is able to drive the cyclical momentum in the second half of the year.
All right.